Goldman Sachs has initiated coverage on two stocks, that is both in the electrical manufacturing service space. One is Amber Enterprises, the other one is Dixon Tech, and they are the two largest players also coming in over there in this industry. Surely keeping them, let's look at what the points are and why Goldman Sachs is initiating coverage here on these two stocks. Now individually, let's look at Goldman Sachs. Now when you look at it, yes, India is moving away from imports. We have been focusing a lot on make in India opportunities, focusing on domestic manufacturing. And when we look at that, we do see that works out well for both these companies, that's Amber Enterprises as well as Dixon Tech. Now they believe that, this policy boosters especially for the electronics component manufacturing in India is something that could support both these companies. But obviously the long-term success for any company depends on the developing a global competitive supply chain as well. So that is also something that will depend on the future growth. But as of now, these two players, the two largest players, is where they are initiating coverage. Now let's talk about Amber Enterprises and reasons why they are positive. So Goldman Sachs has said that they are initiating coverage on Amber Enterprises with a buy stance and a target price of 3,950 rupees per share. That is with a 45% upside coming in for this stock. Now they believe that the Indian air conditioning market is will expand further. Right now it's a $4 billion currently is what the market is for the Indian air conditioning. They expect it to go to $10 billion by FY26 is what they're expecting. That's implying a growth of 14% CAGR. Now obviously Amber Enterprises is has an backward integrated into the components and other AC applications as well, along with import substitutions, PLI schemes, export opportunities. These all things would work out well for the company, and that works out for a growth, strong growth prospect for Amber Enterprises as well, is what Goldman Sachs is highlighting. Now, other than that, they expect Amber Enterprises to actually deliver a 25% revenue growth and a 28% EBITDA growth over FY20 to FY26, mainly aided by the PLI scheme as well as the AC component, which is, these are the main reasons keeping them quite optimistic on the stock and maintaining their buy stance. Moving forward, let's talk about Dixon Tech. Now, they're initiating coverage on Dixon Tech, but they are maintaining a neutral stance as of now with a target price of 4,320 rupees per share, which is with a downside of 6%. Now, obviously, Dixon Tech is one of the largest players coming in here in the Indian industry space for electronic manufacturing, but obviously in the EMS space with electronics, lighting, mobile phones, they're very spread their portfolio as well and the profile as well. And obviously Make in India is something that is going to be pushing the growth further for Dixon Tech. But obviously given this diverse industry it services, the growth opportunity for Dixon is supported by the country's further PLI scheme as well as the import substitution that we have been seeing. So that is what will be aiding Dixon Tech. Now obviously they see significant growth opportunities for Dixon Tech under the PLI scheme. Currently what you look at it, the market which Dixon Tech covers is a $36 billion market, which they expect to grow at the CAGR of 12%. But Dixon Tech is currently trading at 56.5% PE, 5 times the PE of FY23, which is versus its global peers is only 12 times. So which suggests that all these positive sides and positive triggers are already priced in, is what Goldman Sachs is highlighting in its note, and that is why they're maintaining a neutral stance as of now on Dixon Tech. But surely they have initiated coverage here.